September-December 2020 SBR paper question number 2. So first I'm going to start with the requirements. There are 3 requirements as you can see, and this is your question 2, which is for 20 marks, and mind you, your professional 2 marks will come in question number 2, and the other 2 marks of professional marks, because there are total 4 professional marks in SBR. 2 of it will come in question number 2 and the other 2 will come in question number 4. And your ethics question, it's a compulsory question, so you always have to be prepared for ethics. Now sometimes it can come for around 5 to 6 marks, sometimes 7, and this question is for 10 marks. With professional marks it will be 12 marks. So the mark varies, as you can see. I cannot tell you that okay, ethics will come for 5 marks or ethics will come for, it's not fixed. If you see the past paper, it can come for any marks, but you have to be prepared for one ethical question. It will come compulsory, no doubt. Right? Good thing about ethics is you can kind of memorize the answers. Not memorize, like you can see a pattern. There's a pattern of answering ethics question. If you see all the ethics answers in each past paper, you will see there's a pattern of answering. Right? So ethics is not an area to much worry about. It's very simple. Right? Now coming to requirement A. Discuss how Calibra company should have accounted for the sale of apartment blocks in accordance with IFRS 15 and IAS 23. So already they have given you the 2 IFRS. Based on this, how you have to account for the sale of the apartment blocks based on this IFRS and IAS 23. Sale of apartment blocks. 5 marks. They should not be a hard issue. Coming to part B. Provide the accounting entries that will be required to record the contractual sale of an apartment block on 1st of January 2008. Right? How this will be recorded? On 1st of Jan 2008 at the discounted amount over the 2-year construction period. Right? 3 marks. Part C. So majority of your marks in this question is ethics. It's not always that majority of the marks will be for ethics, but in this it is. So discuss the ways in which chief accountant should have acted to ensure that he maintained ethical standards in dealing with the issues described. Okay, there may be more than one issue. That's why such a big mark. Looking at this, you can tell that there's not just one issue, there's more than one issue, because they told it's issues described above, how you're going to deal. So now let us read the case study. This will be the smallest case study out of all the 4 questions because it's for 20 marks. Whereas the first one is for 30 and the question number 3 and 4 are for 25 marks each. So Calibra company operates in a property sector and has invested in new technology. Very important. Which IFRS or IAS we are going to deal with. You will understand. If not full, at least partially you will understand which is the most main IFRS or the IAS dealing in this question. Reading the first few lines. They told this is property sector. Right? So which, always underline which sector the company is operating in. This is a key area. If you miss this, you will miss everything. And has invested in new technology. Okay. Distributed ledger and blockchain. Now distributed ledger and blockchain, these are new technologies. You always have to be, as an SBR student, you have to be updated with these new technologies. Fintech, cryptocurrency, distributed ledger, blockchain, all those things. What is this? Please go to Google is there. Go and research what is this distributed ledger and blockchain. I'm not going to tell here. Okay. To trade and to support property transactions. The financial year end is 31st December 2008. Apartment blocks. So first we are going to deal with apartment blocks. Calibra builds apartment blocks which normally takes 2 years to complete. How many years? 2 years. So this shall tell you what is it. It's like a construction. So when you recognize the revenue also over the year period, not at a single point in time. It is not like you take good and then at that point I'm going to recognize revenue. No, this is over 2 years. So when you recognize revenue also over the 2 years you have to recognize. Right? Because it told 2 years to complete from the date of signing the contract. The title and the possession and therefore the control of the apartment blocks passed to the customer upon completion of the construction. The price which is payable on completion of each apartment block is how much? 9.55 million. Alternatively, customers can pay 8.5 million cash on the day that the contract is signed. The chief accountant has calculated that this represents an appropriate borrowing rate of how much? 6% for Calibra. Calibra immediately recognizes 8.5 million as revenue if customers pay when they sign the contract. What is this 8.5 million which they immediately recognized? Which is the cash which they paid on the date the contract is signed. Now coming to this. Chief Accountant and Bordoni Company. The chief accountant does not hold a permanent employment contract with Calibra Company. Another important thing to notice here, because this will help in your ethics question. Okay, the chief accountant does not hold a permanent employment. He has applied for the position on a permanent basis and is to be interviewed in the near future. Bordoni, a customer of Calibra, wanted to take advantage of 8.5 million reduced price for an apartment block but was having problems with the cash flow. The chief accountant therefore allowed Bordoni to pay 8.5 million and to delay payment until 1 month after the contract was signed. In return, the Bordoni has agreed to provide a good employment reference. Because they have reduced the payment, which is an ethical issue, what Bordoni did? They provide a good employment reference. So the chief accountant of Calibra was afraid that he might lose Bordoni as a customer and referee if he did not agree to the delay in payment. Clear sign of ethics. Clear. You can even write also ethical issue. You underline this last line and write ethical issue. It's a clear sign. Very, very clear sign. It's an intimidation trade. Okay. It's just not one. Even in the next para you can see there will be some ethical issues. Distributed ledger technology. Okay. So Calibra has recently used distributed ledger technology blockchain to sell shares in a property to investors. This digitized transactions are only visible to the authorized parties, which is good. So the chief accountant publicly supports this technology as to manage the new system. However, he has private concerns over the reliability of the due diligence carried out on the sale of the property shares and the potential violation of the local regulation. The directors of the Calibra wanted to increase the number of transactions on the distribution ledger by offering digital shares in the whole of the entity's property portfolio. Although the chief accountant has a very basic knowledge of distributed ledger, he has assured the directors that he can facilitate this move. Chief accountant also has a very basic knowledge. Now, some of you might be thinking that I'm going a little fast. Okay. The reason is because this is just reading. Even you can read it on your own. So it's not, you should not be with me while you are reading. Before you even read or try to understand what I'm saying, better you read it once. You read the whole case study once and keep it ready because you will have some understanding of it. So when I read, you can read faster. Because I got this comment that I'm going a bit too fast when I'm reading the requirements of the case study. It should be like that, my dear friends. You have to come to that speed. This is still I'm going a little slower for you. Otherwise, I even read it even faster with understanding. Of course, it's not that I'm just reading and not understanding anything. I read even much faster than this. You have to come to that pace. If you have to manage your time well, because your time management is not only on writing. Even your reading consumes a lot of time. So you cannot be very slow in reading time and trying to, you cannot be very slow in reading and trying to understand. Then when will you write? The time, when the time comes for writing, you will lose the time. That should not be the case. That is the major reason why ACCA students fail in ACCA. Right? So coming to this. The project has been approved by the board despite the chief accountant's private reservations. The chief accountant has only reasonably qualified as an accountant and wishes to be employed with Calibra on a permanent basis. Now coming to the first requirement. How the sale of apartment blocks. IFRS 15 and IS 23 because they told about some borrowing cost also. So we'll see when you have to deal with this type of question where there are two IFRS or IAS or one IFRS or one IAS, answer one by one. First, we are going to deal with IFRS 15, then we are going to talk about IS 23. It has to be in separate subheading. Okay, now we'll see how the answer is. So first paragraph they talked about IFRS 15. Second paragraph, that's why there's a line balance space there. There should be a space. Then they are talking about IS 23. Okay, IS 23 is particularly easier. IFRS 15 is a long stage. So the performance obligation. See, IFRS 15, when you talk about how the sale has to be recognized, this word has to be there. Let me highlight it for you. Performance obligation, this word has to be there. When it comes how our revenue has to be recognized, or a sale. Sale means what? When you're selling a property means you're recognizing a revenue, right? In short, the question is asking how do you recognize the revenue? So this word has to be there, performance obligation. Right? So the performance obligation will be satisfied how? Upon the completion of construction, which is also when the title, possession and control of the apartment blocks pass to the customer. This line has to be there. I'm not going to underline each and everything. Okay, I'm leaving it to you. You do it, but this line has to be there. The advanced payment represents a significant financing component, and IFRS 15 states that where this is the case, that then revenue is recognized at an amount that reflects the price that a customer would have paid if the customer had paid cash when they transfer the goods to the customer. Right? So IFRS 15 also states that the interest rate used should reflect the credit characteristics of the party receiving the financing, but maybe the rate that discounts the nominal amount of the promised consideration to the price that the customer would pay in cash. In this case, the interest rate would be 6%. Using this rate, the cash sales price of 9.55 million can be discounted to 8.5 million. Right? It is so. So the cash sales price will be discounted to 8.5 million. Right? How do you discount it, by the way? It will be 9.55. This is for 2 years, right? Construction, so 6%. So discounted, you will get 8.49 something. So round it up, it will be 8.5. Because definitely what you are going to receive after 2 years will be less, right? So that they have found the discount factor as 6%. So after 2 years, it will be 8.55. So Caliber should recognize a liability of 8.5 and should recognize accrued interest on this liability balance for the 2 years until it reaches 9.55 million when the performance obligation is satisfied. So they are going to receive initially what? 8.5 million. They should recognize it as a liability, and that interest of 6% for 2 years has to be recognized until it reaches 9.55 million, because that is the one which is agreed when performance obligation is satisfied. Next, IS 23. The interest should be accounted for in accordance with IS 23, borrowing cost, as a part of the cost of constructing the apartment block. Yes. As Caliber's business model is based on construction. Now you see, each word is very important. Business model. What is the company's business model? It is construction. So since their business model is based on construction it takes years. IS 23 states that borrowing costs that are directly attributable to the acquisition, construction or production of this is from your IS 23, from your textbook you will see. It is copy pasted only. There is no difference in the wordings. Acquisition, construction, production of a qualifying asset form part of the cost of the asset, and therefore in this case should be included in the cost of inventory production. Other borrowing costs are recognized as an expense. That also you have to write. You have to be very strong in IS 23 to understand this. Right? Make sure that you reread it and understand. Well, if you haven't understood, you can comment me down below so that I can individually respond to you. Now coming to part B. Right? What is part B? Part B is like a journal entry, because they told accounting entries they told. So here you don't have to describe much. When it's accounting entries means debit credit, journal entries, right? require the construction sale of apartment block on 1st of Jan 2000 at the discounted amount over the 2-year construction period. So 1st Jan, right? It's for 2 years. So 1st of Jan, how it will be recorded? 2008. Cash, right? You're receiving cash immediately on the date of the contract when it is signed. 8.5 million debit. Credit will be liability 8.5 million. Right? And here you are giving what? You're writing it. It's like a narrative you're writing. Record liability on the receipt of a cash. Next, interest. What is the interest? Interest is 6%. So 6% of 8.5 is 0.51. Right? So interest acquiring inventory will be debit. Liability will be credit on 31st December 2008. Because of course after 1 year only the interest will come. You cannot record it on 31st. Look at the date. Dates are very important. Now, here they have shown you the working also. How you got 0.51. Next. Again the interest. How you are getting the interest? With 8.5 you are adding 0.51 the previous interest, and on that you have to take 6%. It's like a compound interest, right? So you are getting 0.54. Then finally 31st December 2009, which is after 2 years, right? From 1st of Jan 2008 to 31st December 2009, it's been 2 years. Now you have to recognize the liability and the revenue. Revenue will be credit of course, and the liability will be debit. So the revenue is 9.5 this time, 9.55, and liability will be debited 9.55. So what happens? Revenue arising on the sale of apartment block per question, right? So the balance on the contract liability at 31st December 2008 will be 9.55 million, right? Add both the interest with 8.5, it will be 9.55 million only. So when the control passes to the customer, Calibre recognized revenue of 9.55 million, right? So all this year 8.5, 0.51 liability was credit, now it will be debited. So the liability will cancel off and then you are recognizing the revenue of 9.55. Part C. Chief accountant, how they should have acted. This is an ethical question, so you don't have, as you can see, it's 2 paragraphs. Right? So the chief accountant should not hold himself out as having an understanding of distributed ledger if he only has a basic knowledge. What does it mean? The chief accountant should not. Now see, ethical question, there's a flexibility. There is no order. You can start in any order. Let's say there are 5 issues. The 5 issues can be answered in any order. That is up to you. So here they have went to what? They are talking about distributed ledger. Because in the beginning they told that the chief accountant has a very basic knowledge. So what does it mean? So obviously when someone has a very basic knowledge, it is very likely that they will not have much knowledge of the distributed ledger. It's a new technology, right? So the chief accountant should not hold. Look at the words when you're answering ethical question. Should not, should, must. So these are the words. They should not hold himself out as having an understanding of distributed ledger if he only has a basic knowledge. He cannot have a knowledge of distributed ledger, because to have a knowledge of distributed ledger you should have a very vast knowledge, which chief accountant does not have in this case study. So because of that, he should have, who you are referring to, who is he? Chief accountant. Every time you cannot say chief accountant, so you can write he or she or whatever it is, but he should have seen evidence of whether the technology can be scaled up to the requirements of the director before promising them that he can facilitate the move. Right? I'm not underlining each word, that's up to you. So since he will not have an understanding of distributed ledger, because he told that he's promising that he can facilitate the move. Before that, he should have seen the evidence of whether that technology can be scaled up or not to the director's requirement. Why? Because every technology cannot be scaled up. To scale up a technology, you need time. It's not a one day move. Remember that. Someone who is saying, who is promising, in this case, the chief accountant is promising the move, he should have the understanding, vast understanding of distributed ledger first before he scale up. But he already promised that he will scale up, he will support it. Where in the case study, I can take you here. Here itself they told, chief accountant of distributed ledger, he has assured the directors that he can facilitate this move, which is according to me, it's not a good move, right? It's a very big step. You're leaping out too far. So also, he must convince himself that the reliability of the due diligence on the sale of the property shares and that local regulations are complied with. Yes. What is it? Due diligence of sale of property shares and local regulations are compiled with. He must be convinced first. Look at the words must, should. They have to have. These are the words. Okay. In order to maintain integrity, professional accountants must be honest about. So the word is here is integrity. Professional accountants must be honest about whether they are comfortable with their knowledge of managing projects such as this. Exactly, you have to be comfortable because you know your comfort zone, how much you can manage. So if you as an accountant is not comfortable that you can manage, but you are saying you can manage, then you are not integral. Integrity is not there. You have to mention the five, not five, differing on the case study. But you should know what are the five fundamental ethics, code of ethics for the professional accountants in ACCA. Professional competence and due care, professional behavior, integrity, objectivity and confidentiality. So here, number one, integrity, right? Because integrity is being hammered in this case. Your integrity, it is challenged. So the chief accountant should not manage the project if he has doubt as to his knowledge, as there may be a significant issue as the project progress. Exactly. We all know that when a project progresses, there will be so many issues coming up. So the chief accountant should be in a position to deal with it. How can he deal when he has a very basic knowledge, right? That's why the chief accountant should not go ahead with this project if he has doubt on his knowledge. So there may be a need to engage specialized consultancy input from a distributed ledger expert. Exactly. See, you have to give actions also. You are saying, okay, this is the issue, this is the problem, that they don't have the knowledge, so they should not go ahead with the project. But on the other hand, you have to give them alternative actions also in an ethical question like this. Because it's a 10-mark question. You cannot play around with 10 marks question giving only 5 points. That also very briefly. So that's why your elaboration also has to be big to get the 10 marks. So alternative is what? You can hire specialized consultancy from distributed ledger experts. You can take experts from that. So similarly, the chief accountant should behave in a professional manner and determine whether the data on the distributed ledger breaks any confidentiality principles. Confidentiality is the other one. Second, he will need to consider the fact that the local regulations may be violated and the repercussions therefore. The technology allows the resale of the shares in the property and they give the chief accountant's worries about due diligence. Illegal transfer of the title ownership could be costly and time consuming to resolve. So the chief accountant must also exercise independence of mind. What is it? Independence of mind means it is objectivity he is referring to. Chief accountant should be objective and not bow to political pressure from the board. Should not bow down. They cannot go with the political pressure from the board, even though it may be a high profile project for the company. He should inform the board of his reservations based upon his opinion and technical knowledge. See, when you're telling some actions that they have to do, you have to tell he should do this, he should do that, he should inform this person, he should take this action. You have to be, your answer has to be like this. Next paragraph, the last paragraph is, one of the main concerns for accounting professionals is the fear of losing objectivity in their judgment. due to pressure from the client, employer, or the stakeholders. Exactly. Objectivity. So this occurrence could create a loss of professional identity for the person concerned. Some individuals are more vulnerable to loss of objectivity than others. Young accountants at the beginning of their career could be considered a vulnerable group as they may be more easily influenced due to perceived lack of experience and pressure from senior colleagues. Yes, see, when you are new, joining a company, you will be more vulnerable to that attack, that pressure groups. You cannot handle it. Why? First of all, you are new there. You don't know much about it. Lack of experience. You don't have much experience. You don't know how to deal with such issues. You are just new. And since they are senior to you, so you'll be respecting them. You'll be thinking, okay, whatever they say, I must have listened, because otherwise there's a threat to your job. So all these things, and even in this also, he has just applied for the permanent position, but he has not got yet. So there's a high chance of being not objective and taking decision based on the pressure. That's what they are saying. Now this you can even write in your own words also. I never encourage to exactly copy paste and write their answers. So the accountant has also just qualified. See, clearly you have to refer to the case study. He has just qualified and so might be inexperienced exactly to be in the position of chief accountant. Chief accountant is a big post. You cannot hire someone who is newly qualified to a chief accountant post. In this case, he has created a self-interest thread as a chief accountant as a personal interest in allowing Bajani to pay the reduced amount of 1 month after the contract for the purchase of the apartment block has been signed, as a wishes a good reference for the client when he applies for the permanent position from the first. Right? Remember that apartment block which they sold, they told that if they reduce the payment, the customer told, I will give you a good reference when you go for the permanent position. Bajani company was saying that. So he has a self-interest thread also here as a chief accountant. So the pressure of applying for this position as inappropriate influenced is professional judgment and behavior. Additionally, there's a threat to the chief accountant's objectivity. You also have to list the threats. It could be the familiarity threat, it could be objectivity threat, or right, anything. It could be threat to objectivity, threat to integrity, threat to any of the 5 professional ethics which is applied to the case study, which stems from self-interest threat from a fear of loss. So how does this objectivity comes? From self-interest threat, from fear of losing Budoni as a client, exactly, which in turn would affect the accountant's chance of securing his position on a permanent basis. Because if he loses Budoni is a major customer, his chances of securing a permanent position will also go. Right? So that's it for question 2. I'll be coming with question 3 and 4 soon. Thank you and take care.